Obama has promised billions more in government spending to jumpstart the economy. But money manager Peter Schiff says that America is on a one-way street to dollar destruction.
Well, I think what's going to destroy the dollar is all the bailouts and all the stimulus programs that the government is pursuing right now. This is a very anti-dollar agenda. And if you look at, I heard Barack Obama the other day talking about, I think it was on 60 Minutes, talking about, look, we're going to do whatever we can to fix this economy, and so it doesn't matter about the deficit. They're talking about massive government spending. We're talking about running $1 to $2 trillion a year budget deficits. We're talking about the federal government assuming all sorts of liabilities. So this is trillions and trillions of dollars coming into circulation. This is going to destroy the currency. I mean, right now the dollar has risen for technical factors having to do with deleveraging and unwinding and margin calls. But once this is over, the dollar is just going to drop like a stone. And unfortunately, people keep talking about the taxpayer. How is the taxpayer going to pay for all this? It's not taxpayers. It's not Americans in their role as taxpayer. That's not how we're going to bear the cost of this. It's going to be Americans as savers, as investors, as wage earners, as holders of other financial assets, because all of these bailouts and all these programs are going to be paid for with inflation. The government is going to create money and spend it. And when they do that, they debase the value of everybody's money that's already in existence. And what's going to happen as a consequence of this massive inflation and debasement of our money is the cost of living is going to go up. They may not succeed in making home prices go up or stock prices go up, but they're going to send food prices through the roof, energy prices, clothing, all the basic necessities of life. And eventually, the dollar is going to lose so much value that even things that we're used to seeing fall in price, like consumer electronics, we're going to start to see prices there rising very rapidly.
Well, could the dollar be somewhat strengthened by relativity in the sense that other European economies, other economies will see their currencies fall?
Well, I think all currencies are likely to fall in relation to real money, which would be gold, but I don't think currencies are going to fall in relation to the U.S. dollar. I think our currency is going to lose a lot of value relative to other currencies, and it's because our problems are more severe. Remember, the global economy, I think, is sound. There's a financial crisis around the world because we're the big debtor and the world is the creditor, and so we're broke. And so the people that loaned us the money feel that because we can't pay it back. So those are real losses on the part of our creditors. But beneath the surface, the global economy is sound. Ours is not.
So if the dollar goes down, are you banking on the rise of gold or other commodities?
Well, yeah. I mean, I think gold is going to have a spectacular run because I think gold is going to gain not only against the U.S. dollar, I think it's going to gain against the euro, against the yen, against all the other currencies. So I think you're going to see a spectacular rise. In fact, recently, gold prices have come off their highs. Gold was about 1,000 at its peak. Now it's down around 700. But if you compare the price of gold to other assets like stocks, gold has still done better this year than stocks and at any market in the world. Gold has done well versus every other commodity, every other metal, energy, agricultural commodities. Gold has also recently, in the last month, made new record highs in terms of the Canadian dollar, the Australian dollar, the South African rand. So gold, I think, is doing very well beneath the surface. And I think once this dollar rally ends and the dollar really starts to fall, I think the price of gold is going to take off.